Our topic today is depreciation. What is depreciation and why is it necessary? How does it affect the bottom line? What are the advantages of running depreciation? While we discuss depreciation, we will look at how it works in the Sun Plus world. When you buy a tangible physical asset, you pay a certain price for that asset. For example, let's say you buy a shiny, brand new car, $35,000. But even if you're the little old lady who only drives that car to church on Sabbath, after 2 years, if you decide to sell the car, you can't charge $35,000 for it because it's no longer worth $35,000, even if it's in perfect condition. Unless, of course, you get into antiques or collectibles, which is an entirely different conversation. Over the course of time, your asset is going to experience a reduction in value as a result of wear and tear, even hypothetical wear and tear. It simply will not be worth as much as it was when you purchased it. According to a quick Google search, your car's value begins to decrease the moment you drive it off the car lot. So if you list that asset in your records every year as being worth $35,000, your records are going to be way off. Depreciation is the way that accounting records and allows for that reduction in asset value. When you depreciate, the cost of the asset will be spread over the asset's estimated useful life. In effect, it matches up the historical cost of the asset with the revenues that its use helped you to generate in a given accounting period. The overall effect of calculating for depreciation is that the organization's net income will be reduced, which means that depreciation has a couple of cool advantages. One, your financial position will be skewed if you don't run depreciation. So accounting for depreciation keeps your financial statements accurate, and a reduction in net income lowers your taxable income. So depreciation is not something that you're going to want to ignore. Fortunately, depreciation is easy to run in Sun Plus. Let's look at the process of depreciating a single asset, which is an option. Let's say that your organization has purchased a 15-inch MacBook Pro laptop computer. Let's look at how it was set up in the fixed asset records. We see that the laptop computer was purchased at the cost of $1,500. In keeping with the organization standard, the depreciation method will be straight line. And this particular piece of equipment is estimated to have a lifespan of 3 years, so the base percentage depreciation will be 33.33% a year. Depreciation is set to begin the first period of 2017, which is when the MacBook Pro was purchased. This particular asset has not been tagged with analysis codes. Many organizations always tag their fixed assets with function, often location, and who has control of that asset. But for this particular one, those were not set. Depreciation expense account and balance sheet accounts were entered in the general tab. Posting presets have also been set for this particular asset. These are the asset posting presets. Basically, the presets tell the system that 100% of depreciation for this asset is going to be posted in Fund 20, Resource, Function PS General, and Restriction. Let's go to the depreciation calculation function. Let's look at each of these fields and get a feeling for its role in the process. At the top of the tab, we have 4 fields that are used as basic filters, and they will select the assets or the asset range that will be included in the depreciation calculation. To depreciate a range of assets, you would enter the range of asset codes in the asset code from and to field. For this particular depreciation run, we will enter E0021 to E0021 because we want to depreciate a single asset. If we wanted to depreciate all of the assets in the system, then we would leave these 2 fields blank. The asset class fields allow you to depreciate by the type of asset or the category of asset you want to depreciate. So if you wanted to depreciate all of your equipment with a 10-year lifespan, then you would select 10 equip as your asset class values. We're going to leave those blank because we want to choose our asset using the asset code. Moving down, the top 3 fields in the selection criteria section of the screen are used to select the asset or assets that you want to depreciate by the analysis dimension with which they have been tagged. If you look at the analysis dimension options, you could tag by any analysis dimension. If you do not wish to select your assets for depreciation in that way, you can use the unused value. We will enter our depreciation period for this particular asset. Let's enter the 7th period of 2020. You always want to enter a depreciation period when you're running depreciation calculation. Some of these other fields can be left blank, but that is not one of them. You have two options for the post-transactions fields, yes and no. If you choose the yes, when depreciation calculation is run, the transactions that are generated by that function are going to be immediately posted into the ledger. If you choose no, you can run depreciation calculation as a test to see what the effect will have on your books. And if you're happy with the results of that, then you can go back and rerun it using a post-transaction value of yes. Let's use no for our example. The next field, posting period, is the most confusing field of the entire process. You have two options. There's a single option and a historic option. That's really not particularly clear on the face of it. So let's keep it simple. You're almost always going to want to choose historic, and let me tell you why. The determining factor for posting period is how and where the depreciation is going to be recorded in the system. Will the amount for that period be recorded in the relevant period, or will the entire cost of depreciation for whatever period or periods have been run be posted as a single lump sum into the current accounting period? If you think about it, unless you're purposefully and mindfully posting a lump sum in a single period, you're going to have a problem with your financial statements. They're going to be very far out of whack because you'll have this gigantic posting in a single accounting period. So you're not going to want to do that. I would want my depreciation to be calculated for each period and posted in that particular period. That way I know that my financial statements will make sense. The Sun Plus standard is to encourage people to use the historic posting period. What happens with historic is, let's say that for some reason depreciation has not been calculated for a certain number of periods, like 5 or 6. When you do run it, historic will go back to the last time depreciation was calculated. The system will figure that out for you, and then it's going to make sure to calculate depreciation for every period since that last run to the current accounting period. And then the correct amount for each period will be posted into that accounting period. So we're going to use the historic setting. The next field is suppressed transaction. And once again, we have two options. This lets you decide how the assets are posted to depreciation expense. Do you want an entry for every asset every month to be posted in depreciation expense? If so, choose no. If you don't want the depreciation expense posting to include all of the specific asset detail, you will choose yes. The Sun Plus standard is to choose no because there are many advantages to having the specific asset posting detail in the depreciation expense account. So we're going to choose no. The next two fields, balance sheet and profit and loss, are very interesting because the values that are entered here or that you will enter here are just placeholders. Let me show you what I mean. I'm going to go back to fixed asset records, and about halfway down on the general tab, you will find balance sheet and profit and loss accounts. In this particular asset, those have been set. If an asset has been correctly set up in asset records, then a balance sheet account and a profit and loss account will have been specified. It's very important to have those associated with depreciation because the system needs to know where to post the transactions. The system has been set up to insist on your having these two values populated. If these two fields are not populated, and if for some reason an asset or assets have been set up without having the balance sheet and profit and loss accounts populated in fixed asset records, then whatever you enter here in depreciation calculation will be the accounts that are used. Business rules have been set up to enforce these fields being populated, and depreciation calculation won't even run if those have been left blank. So you want to always populate those two fields if they are not already populated. Moving down, we come to the consolidate profit and loss field, and here once again our options are yes and no. If you want to consolidate, which basically means push together all of your entries as far as fund, function, restriction, and asset record are concerned, you would choose yes in consolidate profit and loss. If not, you will choose no. The Sun Plus standard is to choose no. So here are the values that we need to run depreciation for this particular asset. And we can run our depreciation. Notice that when I clicked OK this last time, nothing happened besides certain fields graying out. That is because there are certain functions in Sun Plus that require you to push the print button in order to kick off the process, and this is one of them. So we need to click print in order to start our depreciation calculation. This brings up a second tab, the Document Format Runtime Parameters tab. Here you can tell the system if you want to print out the listings, or if you just want to take a look at it, if you want to save it somewhere in your computer and come back to it later. We're going to leave this set to view. We'll scroll down and we can click OK. We did get an asset depreciation calculation listing, which shows you all of the depreciation that was run for each accounting period. Here we have the asset code and the name of the asset, the start period and the last period, the gross value and the depreciation value. It also shows the straight line and the percentage, and it shows you how much depreciation was calculated for each period. So that is the depreciation calculation process. If you wanted to depreciate all of the assets, then you could run depreciation calculation again, and this time you're going to leave all of these selection filters blank up the top of the screen. When I click OK, I can leave the analysis dimension at unused, or I can choose a different analysis dimension to depreciate by. And we're going to enter the period for our depreciation. Post transactions no, posting period historic, suppressed transactions no, and our accounts. I'm going to click OK and let's print. Once again, click OK and we'll see what we get this time. Here is the asset depreciation calculation listing. This is a 33-page long document. It's going to list all of the depreciation for all of the assets in the system. For instance, this particular asset, an office building, the gross value is $2,500,000, and the depreciation that has been calculated to date is $834,257.28. Straight line depreciation. And here is the percentage, and this shows the depreciation for each of the periods. This wraps up our video on depreciation calculation. Thank you for joining me as we looked at this system function. I invite you to come back for the next video, which will be on disposing of fixed assets.